Welcome back to Old Guy REI. Today, Mikey and I thought we would do a recap on our Wednesday Zoom accountability call. And the thought came up because Mikey's been writing up short recaps on X, and quite a few people have been taking a look at those. So we thought it might be valuable to go over our last Wednesday call because we had a guest on that brought a lot of value to the call, and that was a lender that we're working with, and his name's Brian Beilstein, and we'll be posting his information on the video. And we just wanted to highlight some of the valuable information that we got on the call. So I was going to ask Mikey first, what things that we discussed that night were valuable to you, and did you learn anything new?
It was such a great accountability meeting, and I've also created a separate file with Brian just so that he could look over my profile. And so I'm kind of gonna combine some of the meetings I've had with him individually and combine it with the group session. And I haven't seen a lender go over so much detail where he actually showed me the rate sheet and he showed me what par was. I thought that was incredible. And we also, him talking about working with your CPA, saying, before you file your taxes, maybe you could change this or adjust this so that you can be more bankable. That impressed me a lot. And because of my DTI, we were going over what I could qualify for in conventional lending as opposed to DSCR. And I had a lot of questions on DSCR, talking about the one-to-one ratio, where that's only your pie tie. And we also talked about, for DSCR, they only look at that loan alone. So they don't factor in your other properties and the lease lengths on those. But there's also downsides where, buying points are really costly. And I also learned that you can convert a DSCR to a conventional later down the line if you're interested. And it was so good hearing about what he's seeing in today's market, where how banks are tightening now. And even for second appraisals, those are harder to order. And they also really need to know if you do order a survey and that the single family is better terms for lending instead of the small multifamily. And, we had talked about refinancing, and that was great because I sent him over my mortgage statement so that he said he'll make sure he'll put rate alerts on on my file. And when it gets to a point where that refinance makes sense, he can reach out to me. And it's like, just having your systems in place to make it easier for me instead of constantly checking the rates and trying to figure out what works best for me.
That's a good point. When you were talking about rate alerts, what do you consider to be, or how much lower would a rate have to be for you to consider refinancing? Have you figured that out yet? Like
Yeah,
1% or 1.5%?
that's exactly what I was hoping is when had Brian talked about, 1%, and then usually like to see it get paid back within the year. And I'm still learning too, so I'm still asking questions, but I think that would be my kind of guiding point.
Yeah, Cynthia and I were talking about that this weekend, and she was asking the same question, when does it make sense to refi? We have probably our highest interest rate is 6.625. And so we were running numbers as if it dropped by a point, and we were able to get 5.625. And on the property that we were analyzing, it made a difference of about $55 a month on the payment. But you do have to calculate how much it costs you to get there, right? Because there's going to be um, the refinance cost, and if that's $1,000, then you have to calculate how long it takes you with that $50 increase in cash flow. How long will it take you to make the $1,000 back? But even though that's important, if you're going to hold the property for a long, long time, that helps as well, right? Because if you're not going to refinance in a year, if you're not going to sell the property in a year where you would lose that benefit, then it makes more sense. I think our number, the closer we could get to 1.5% lower is where I would wait to do it. That would make a bigger difference in the cash flow. And we are planning on keeping the properties for, well, forever. So, we will recoup it. I know the first year, um, 16 or 18 months sometimes. And Brian's really good about that. He will caution you, not to go too far, not to spend too much right up front to get that lower payment, because the longer it takes you to pay back, the less benefit you get in those first 18 months or so. So he also mentioned some things like he's going to send us a list of the required documents that they always ask for, which will help us get prepared for when we're going to go through the application process or the approval process. And he talked about being the possibility, or that it is possible, to refinance an investment property, and you're able to buy points down during that process as well. So that was really valuable. And one thing you and I talked about on another call was the fact that he's already looking at our portfolio and helping us plan for the future, right? If right now, he just helped us close on a property a couple of weeks ago. He's looking at our portfolio, making sure we're in position if we wanted to buy another one. And with his approval, we're under contract for another one this week. So that was a big help, just knowing that, unless you've had an established relationship with a lender for a long time, I don't think they're going to treat you like that, right? Like you said, you haven't worked with him yet, but he's already helping you plan for your next purchase. He's showing you the numbers, where last time I think you mentioned on the lender you worked with last, it took you a bit to get their actual estimate on the closing statement. So yeah, Brian's just a great guy all the way around. A few of the other people had some good questions for him, and I think moving forward, you and I talked about trying to get other people on our Wednesday call, that have helped us in our journeys. So, Brian being the lender, next week we're going to have one of the associates from Hemlane come on and talk about Hemlane and that app, and how it can help us manage our properties. So hopefully a lot of people will jump in for that one and bring their questions for them. And then I think the week after, one of our actual property managers is willing to come on and talk about that process, what helps them as far as a client, people that they like to work with, and people that are a headache to work with, different things like that. What they go through each week, keeping an eye on our properties for us and things like that. So I hope the calls are going to be getting more and more valuable. And we've had a few new people drop in occasionally since we went on the school community as well.
Yeah, and even how Brian talks about they have the investor meetings every month, him alone. So it's great that he's also learning the investor circles, and it just feels more like speaking the same language. You want more of those people on your team. And, it's so great that you're able to share that resource that you have with everyone.
Yeah, and I think he was mentioning too that the person he works with, Greg, is I don't think they're partners, but they work together. I think it's Greg's business, but Greg is an investor and he's been at it for quite some time. So they do work with a lot of investors, and that's another good point, that they know the process. They're licensed in 46 states, I believe, and along with them and our agent in the area being an investor herself, and our property manager being an investor, that all is coming together, and they're helping us learn that market better and make good decisions on the future properties that we're hoping to buy there. So I think in general, the calls are getting more valuable for everybody in the group. And hopefully, I think we usually have between 15 and 25 people on the call. Sometimes it gets a little bit harder to make it around to everybody. So we're trying to figure out ways to do that where everybody gets a chance to ask their questions or voice their concerns, let us know what they're going through if they need help. So that's one thing that, we're taking suggestions and trying to change the format a little bit to help everybody that joins us because I know, we've gotten a lot of value out of it and there have been a lot of great connections made in the group and we just want to keep that going.
Yeah, and it's evolving every week, and we understand everyone's time. Some people can maybe hop on for one week and not attend the other week, but that's fine. Just if you have something pressing, feel free to be top of the list and say, hey, I really got this issue. Could you really help me out? And that's what I love about the group is, even though someone may have a more pressing issue, we can all learn going through that explanation and hearing all the responses back. And I was also thinking, someone had a question for Brian if he did 50/40/10s. And unfortunately, they don't. But that was a great question, I thought. And there was also another investor asking, are you still lendable even with only rental income? And Brian said, yeah, you sure are. So, you know, it's great just to ask questions, see what you could be lendable on. And I was learning by all those different questions.
Yeah, and again, that's a good point because of course, all lenders aren't the same, right? And we were working with a really great lender, and we still have a good relationship with them, but their loan limits were too high for the area that we're buying in. Their minimum loan was $100,000, and so we went looking around for lenders that had a lower threshold, and neighborhood loans was we sound like a commercial for neighborhood loans, but they go down. I think Brian said they've even gone down to 40 or $30,000 loans depending on the situation. But our specific needs were $50,000. And because we're purchasing properties between, 80 and 100,000, after our down payments in there, our loans end up being 60,000 or a little bit less. So we needed somebody that could help us with that. And that's where we found it. But other lenders could have different packages or different investors that they work with that are willing to do different things. So it's still good to check around, but you and I just talked about once you find a good one, and Brian's proven himself that he cares about us and what we're trying to do, and he's willing to give us information up front, even though you haven't done an application with him, and he's already, providing all this great info for you to help you make a better decision. So hopefully, we'll keep these going. We'll be doing recaps after every Wednesday call and just go over the highlights in case somebody can't watch 4 hours of the meeting, which those are online as well. Those are posted on the Old Guy REI YouTube channel, and they're also posted in the school classroom. So thanks for taking the time to go over this with me, and I'll look forward to catching up with you after the next meeting.
Yeah, sounds good. And even that other lender you mentioned, Aaron Chapman, I'm glad you told me about him because I followed his YouTube channel and he does great recaps of just the market and how the lender sees the market. He is sharp as a whip. And I'm glad you had mentioned him because now I follow him and I listen to all his videos as well.
Yeah, we should post his information too on this video. And then um, also, I know you've already had some people reach out to you and you've talked to them privately about some stuff in Pittsburgh. That's where you invest. And I'm always happy to take calls from anybody that has questions outside of our Zoom calls. So if it's okay with you, we'll put all our information in the description as well, so people can reach out if they have questions or need to know how to find the meetings.
Yeah, feel free to reach out anytime.
Okay, thanks. Talk to you
Yeah,
soon.
thanks.